still got some people logging on. This is our fifth one, and we've had over, 2,500 registrants for the last five, and we've had over 200 people attend each one of the webinars. So there's a good hunger and a thirst for non-QM products out there, and we can tell just by how our business has been picking up over the last 90 days. So we'll get started here in a minute. I'll introduce our subject matter experts here in a minute, and give us about another minute. We'll get started here. See some of the people logging in, see if I know anyone. Maybe there's some of Scott's customers logging in. Got Tony and Tom and
my mom,
Tim, Stephen Miller. Stephen Miller, how are you? Stephen Miller is a great non-QM loan officer here in Dallas-Fort Worth. So good to see Stephen on the call. And we'll get started here in about 30 seconds. Hope everyone's having a great day. Weather here in Dallas is not good. And just so everyone knows, I'm located here in Dallas. We have an ops center here in Dallas, Texas, and I am working out of the office here today. So, all right, let's get started here. Hey, this is, like I mentioned, this is a deep product dive. We've done 4 of these before. This is our 5th one. It's great. We're gonna teach you basically to become non-QM experts, because we have 2 non-QM experts on the panel here. What this is not going to be, this is not going to be an Angel Oak public service announcement. I'll talk about all the securitizations we've done. We've done 6 since 2020. We're not going to talk about the $3.3 billion business we closed in 2019. We're not going to talk about the great account executives we have across the country, but we do have 2 of them on the call with us here. We're going to talk a little bit about the pause. As everyone knows, non-QM took a pause in halfway through March through April. But since then, and all the way through yesterday, we've had 24 enhancements. So it's really imperative that you're going to hear about those enhancements that were just rolled out yesterday afternoon. So without that said, I'm going to introduce, we've got Gigi on the call. Gigi, say hello to our audience.
Hello.
Tell us how long you've been with Angel Oak, Gigi, and what do you like about the non-QM space?
So I've been with Angel Oak for a little over 3 years now. My background is definitely non-QM sales as well as underwriting, operations management. What I love about Angel Oak is the ease of doing business, the automation, how easy it is to get a loan registered and closed quickly.
Thank you. And Gigi, you're a top producer here, and congratulations on a really good year in what we thought was going to be a tough year. So congratulations. Scott Quinn, another guy I've known a long time, like a brother to me. Scott, say hello to our audience today.
Thanks, John. Hey, everybody. Scott Quinn. I've been with Angel Oak over 5 years. I'm actually part of a team with my partner, Gary Martinek. He's been here over 5 years as well. So over 10 years experience just in Angel Oak process and product. Between the 2 of us, we handle Maryland, DC, Northern Virginia together. And what do I love about non-QM? Money, baby. That means extra money in your pocket.
Yeah. Yeah, so we got a little East Coast representation with Scott, Gigi on the West Coast, so, and I'm stuck in the middle. So we're going to have fun today. And, we're going to dive into the website. This is an interactive webinar. I'm looking forward to getting all your questions through here. So I'm going to be moderating it. And we've got Gigi and Scott, who are subject matter experts. So we'll jump right into it. I already have a question here. It's, what's the difference? What's the difference between a non-QM loan? So let me go into some highlights there before we get into the products. No matter what, and I want to remind everyone, we still, in the non-QM world, we still have to abide by the ability to repay. We may document income a little bit differently, but we still have to abide by the ability to repay. Also, restrictions. Agency loans are restricted to 30-year terms. We have interest only. And we have interest only available. Fees. Fees are capped in the agency world at 3%. In non-QM, we could go up to 5%. And then usually debt to income is capped at 43% in the agency world. In the non-QM world, we'll go 40 on the front and 50 on the back. So great questions. Please keep them coming. Again, this is recorded. I want to make sure everyone knows this is being recorded. We'll get a copy out to you after the webinar. If we don't get to your questions, because the previous 4, we can't get to all the questions, we'll make sure your local account executive will reach out to you and get your questions answered. So without that, but before we jump into, I'm going to go to our website here. We're going to talk about bank statements. But before we talk about bank statements, we're going to take 10 seconds to do a poll here. And we'd like to ask the audience, who has originated a bank statement loan in the last 12 months? So if you guys could just take your time, answer the poll question. If you've closed a bank statement loan in the last 12 months, click yes. If you haven't, click on no, and we'll get our results here in about 5 seconds. So, and just so everyone knows, just as we're waiting for the poll to come in, our web traffic over the last 60 days has been off the chart. So, there has been a lot of interest in the non-QM space. So, okay, poll results are in, and it's amazing. It never ceases to amaze me. 73% have not closed a bank statement loan in the last 12 months. Guys, there's 53 million self-employed borrowers out there in the U.S. This is a huge opportunity. If you're missing out on it, they're going to get closed. So without further ado, I'm going to have Gigi take us through some of the highlights of the bank statement program, and then we'll get into the Q&A for bank statements.
Okay, so minimum loan amount on a bank statement program is $150,000. We will go up to $3 million. We allow personal or business statements, either 12 or 24 months. Your benefit for 24 months is obviously pricing. It's an eighth better in price. Rates are 30-year fixed on all our programs, but on the bank statement program as well. We do require 2 years of self-employment for that program. They can own as little as 50% of the business for business bank statements and 25% for personal bank statements. Purchase and cash out refis or rate term. So either we allow second home, we allow investment properties and primary residences. We do have a 1099 option now for this program. So if somebody is 1099'd, instead of providing all 24 months bank statements, we can take 2 years of 1099 for that. We have a 40-year interest only, so it's 40-year fixed with a 10-year IO period. Most loans are qualified with an expense ratio of 50%. We can deviate from that with CPA letter confirming the expense ratio. And that's determined by our business questionnaire. We do go down to a 640 FICO now on this program as well, and that's new from yesterday, with a 90% maximum LTV.
Yeah, so Gigi, we've got some great questions coming in. So please, get those questions coming in, because we do want to answer all your questions. And again, if we don't get to all your questions, we will have your local account executive. So Gigi, some people are asking about, we talked about enhancements. And if you said this, Gigi, I'm sorry I missed it. So if I missed it, maybe a few other people have missed it. What score do we need to do a 90% LTV?
Now we'll do a 90% with a 700 FICO score.
Great. And I know you mentioned we just rolled out the 640. Scott, some other questions coming in. Who calculates the income for us? Scott, you want to take a shot at that question?
We do, John. We have a bank statement review team that takes care of that calculation up front. We will do this on a TBD, so your borrowers and most importantly, your agent partners know what those buyers qualify for before they hit the road to put a contract in on a home.
Yeah, so that's key, because we're all about the relationship with you and all of your referral partners. So that's key. A lot of these deals come in, and you got the tax return 2 weeks after they sign the contract, and you realize they don't qualify for that house. So that's a great point, Scott. Really, really good. So Gigi, the question we have here: do you have to be self-employed?
Yes, you have to be self-employed. You have to be self-employed for 2 years. We'll require a CPA to confirm percentage of ownership and length of self-employment.
Great. Great questions coming in. So this sounds like a simple question, Scott, but what's the difference between 24 and 12 months? And if you answer me 12 months, I'm going to come through the screen here. So,
all right. So
what's the difference between 12 and 24 months of bank statements, Scott?
All right, I scratched that answer off. The simple answer is, besides an eighth in rate, it is a little less paperwork, obviously, 12 months to be precise. Depends on the circumstances with the borrower's business, frankly, John, because certainly with COVID, self-employed business may have had a bit of a downturn in the last 12 months, and we'll still look at those last 12 months and qualify them off of those statements. If we take 24 months and there's a significant difference in their deposits, we'll allow up to a 35% increase or decrease year over year. And if there's a greater than 35% decrease in deposits, for instance, we're going to revert back to 12 anyway. So really, the difference is, how's the business doing? It's an alternative income program anyway. So an eighth difference in rate versus a 12 less pieces of paper tends to make it a little more easier for everybody involved.
Yeah, and Scott mentioned this earlier, get us to 24 months up front. We're going to calculate the income. So it's not any additional work on you. Yes, it's the borrower, sending you a PDF of those extra months, but we're going to calculate the income for you. And because Scott and Gigi are the experts, they're going to tell you what we need to do. Let's use 24, get a little bit better rate, or they're going to tell you, let's go with the 12 because of something in the income. So again, we're going to do that work for you. So Gigi, a question came up. Maybe we can go over the scores and the LTV buckets again for some of these people, just to kind of help them out here.
Okay, so a minimum score of 640 will get you all the way up to 80%. 660 up through 760 will get you 85. 700 and above will get you 90.
Yeah, and guys, that Gigi mentioned it earlier, so if you didn't hear that 640 bucket's a new bucket. And the reason why we continue to have these webinars and the reason why our AEs are the best in the business is because, you know what, they know everything and they know all these changes. And it's really important to come back to the website too, because once we get all these updates, all of our tools are updated on the website also. Not only just the programs, but for those of you who have done business with us, the quick quote tool, and everything else like that. Scott, some more great questions coming in. What's the max, or probably what's the lowest expense ratio that we'll go to?
In fact, the lowest expense ratio we will use is 0. However, the requirement for that is we're using personal statements where the business owner can verify business statements. And those funds going into the personal statements are what we're going to use to qualify them. Otherwise, we're going to use a minimum of 30% expense factors. We require, as Gigi mentioned, we're going to require a statement from their accountant letting us know what the expense factor is. As long as it's 0 to 30%, we're going to use 30%. If it's 30 to 50%, we're going to use that figure. Otherwise, we're going to use 50% unless there are a handful of business types, manufacturing, retail, gas station, that sort of thing, new home builders. We're going to have a minimum expense factor of 70%. By and large, we default to 50%.
Yeah, that's a great, and Ken Hill asked that question, so I think you answered Ken's question. So Ken, great question. Hopefully, if you need a deeper dive on that, Ken, we'll definitely reach out to you afterwards. So just looking at some other questions here. Maybe if you could dive into 1099 a little bit deeper, Gigi, just share with us a little bit on the 1099.
For an example, a loan that I've closed on a 1099 program was somebody that was commercial real estate agent. So obviously doesn't have maybe consistent deposits every single month, but does a few large deals every year. So what that did was that gave us his 1099 where we took his total for the year, not having to see monthly bank statements, and then a year-to-date basically commission statement from the real estate company that he worked for. So that, and then also you can only have one 1099. You can't be an independent contractor that works for multiple companies and has multiple 1099s. We accept 1099s from one company only.
And it's and this is probably a good time to bring this up too. About 25 to 30% of the loans don't meet our guidelines, right? So working with your subject matter experts like Gigi and Scott here, they're going to know the second, third, fourth layer of questions to ask you to get us closer to a yes. So, but they're also great at what they do, and they'll give you a quick no when it doesn't make sense. So a lot of the loans we do are those make sense loans. A couple other questions here. Can we use multiple bank statements? Scott, you want to grab that one?
We can, as long as the borrower can prove ownership of 2 businesses, and that's the max we'll use is 2 businesses. And there's no commingling of deposits, transfers going in and out of each account. We're happy to use 2 separate businesses to get them to qualify. I will honestly say, however, especially with business statements, that tends to be enough. One business account, it gives us, even with the expense factors, it gives us exponentially more income to qualify than their tax returns do, for obvious reasons. They have a good accountant, they take full advantage of the tax laws. And I want to be clear, since everybody's over 70% of you haven't closed a bank statement loan, this program keeps the lights on at Angel Oak. This is a huge program. We do them across the country every day. And we just reduced our LTV from 90% down to 700. It was at 740 before 10:30 a.m. yesterday morning. We're constantly making changes. So please don't ignore these programs. Please make sure you're taking these to your referral partners. These are critical for your success in 2021.
You'll probably hear us say this a few times on the call, that loan's going to get done. If you choose not to do it, that borrower, those self-employed borrowers, they're self-employed for a reason. They're self-employed because they're tenacious, and they're going to get that deal done. And if you don't do it, you're in jeopardy of losing that referral source. So great point. Scott, what if there's 2 people on a personal bank statements? Maybe you can elaborate on that a little bit.
Sure. All parties have to go on a personal account. All parties have to go on our loan, which typically means a spouse. Now, if that spouse happens to be W-2'd, we're happy to back that W-2 income out, utilize that income, run a 4506 on just that borrower, and still go bank statements for the self-employed borrower all day long. And in fact, with that, we can determine a primary wage earner. A primary wage earner makes at least 51% of total monthly income. And at that point, we'll use whoever makes the most income because we can determine both incomes. If we can't determine a primary wage earner, we're going to use the lowest scoring borrower in that instance, John.
Yeah, Gigi, this is going to be right up your alley, this next question. Talk about the loan amounts.
Okay, so
Scott's going to get a little annoyed here, but go ahead, Gigi. Talk about those big loan amounts.
Big loan amounts. Maximum loan amount on our rate sheet is $3 million. We actually will consider loans over $3 million on a case-by-case basis. Anything, we go 90% to $2 million. Anything over that is 80%. So 90 to 2 million, anything over is 80.
Great. Scott, what season? You got another great question. Please keep these questions coming. They're great questions, and I promise you, if we don't answer them all, we will get them answered before end of day tomorrow. So, and probably before then. Scott, seasoning on bankruptcies.
48 months right now, John. If it's a Chapter 13, we'll go 24 months from the discharge as long as it was paid on time and it was filed at least 48 months ago.
All right. And then I had the question here. I think I lost it here. Type purchase, refi, cash out, Gigi, and then property types. The other question is.
Property types, so single family, 2 to 4 units. And what
condos?
Was the other question? Condos, fine, everything. What was the other question?
The other question was, someone asked, do we do cash outs on this? So,
We do cash out with a minimum FICO score of 660 for cash out, maximum 75 for any FICO under 700, maximum 80 for FICOs over 700. Second home is maxed at 65.
Great. Thank you. I apologize there, Gigi. So, but guys, what if the spouse, Scott, you mentioned this a little bit. What if the spouse has a lower score? Jacqueline, great question.
Well, if she's going on the loan and we can't verify her income, and I want to emphasize if she's going on the loan, then we're going to use the lowest scoring borrower as our primary borrower, who we're going to base the LTV and pricing off of, and so forth. So my question is, if it's a bank statement borrower, does the spouse need to go on the loan? Can she go on title?
Right. Great. Yeah, and then Ruben asked a question here about the interest only. Gigi, you want to talk a little bit about the interest only, the terms, how it's amortized and.
Sure. So interest only is a 40-year term with the 10-year IO period, amortized and qualified on the 30-year full PITI payment.
Right. Guys, keep the questions coming in. Yes, investors are available on this. Interest rates, we'll talk a little bit about interest rates because we're going to show you a very slick tool on our website. So give us some time. We'll show you a little bit of rates. But also what happened yesterday, we also decreased the buckets, the scores required for the higher LTVs. We also lowered rates across the board on almost 90% of the buckets that we have out there. So, again, when we get to Quick Quote, and I'm not sure if Quick Quote was updated today. As of this morning, it wasn't. And again, these changes come fast and furious, so we're still catching up on them. So just bear with us. Again, max LTV for our bank statements, Gigi mentioned it earlier, it's a 90% LTV down to a 700 score. Prior to yesterday, it was a 740, so we picked up a couple of buckets there. So great stuff.
And also remember, there's no MI on anything over 80.
Great point, Gigi. So when you do see a rate, and these are self-employed borrowers, and if they start to question you on their rate, maybe they should go back to their CPA and reevaluate the way they file their taxes, and the CPA is going to say, no, that rate is fantastic, jump on that loan today. So, and then we're going to talk to you about how to market to CPA at the end of this. So again, want to be respectful of everyone's time. We allocated an hour. A couple of these have gone over. But this is being recorded, and we will get everyone's questions answered. There's a question. Do you count all the deposits in the business account, or are there restrictions? So maybe this goes back to another question. What about large, out of the ordinary deposits? Scotty, you want to take a shot at that?
Look, it's going to be dependent. It's frankly deal dependent, John. We're going to take a look at the business type. Is that consistent? This is another place where the 12 versus 24 months comes into play, because if there's some inconsistency in deposits in the last 12 months, getting the previous 12 months may show that, yes, indeed, those inconsistencies are part of their pattern and not just a one-off certainly due to the last 12 months of the pandemic. So it really is going to be deal dependent. Certainly on personal statements, we're going to be a little more discriminating in terms of what are countable deposits and what aren't. Things that are transfers into a personal account, for instance, that aren't from the business account, they're definitely not considered deposits. Certainly returns to Amazon and so forth that show up as a positive, as a deposit, they're not considered deposits either. They get backed out. We are much less critical, if you will, on the business statements, but again, it's going to be deal specific.
Yeah. So again, it's 25 minutes after the top of the hour, so we're going to move on to our next program. But before we do, just think of this. If that borrower has grosses $200,000 a year, writes off 75% of their income, makes $50,000, maybe they're qualifying for a $200,000 house. But if we use their bank statement and we qualify them, maybe it's $100,000 or $150,000, right? They're qualifying. You are increasing that borrower's purchasing power sometimes 2 to 3 times more with that with using bank statements. So again, it's not W-2 people buying those luxury homes. Most of those are self-employed borrowers. So like Scott said, the opportunity of 70% of you have not closed a bank statement loan in the last 12 months. Hopefully the information we share with you today eases that concern or that hesitancy. So hopefully, we'll get you in touch with your local account executive and get you moving and grooving on bank statement loans. So,
hey, John, one last thing. Your agent partners are all self-employed and they're 1099. They'll love this program. if you need to make them aware of this program, if for nothing else but their own loan. You do their loan, they'll love you.
Yeah, you just answered Jacqueline's question. So yeah, take this to your realtors. They'll love you for it. So we do need to, want to be respectful of everyone's time. We're going to have Scott cover our Platinum program. Scott, give us some highlights.
Platinum program is terrific for those borrowers who want to buy a big house. They're typically full doc. They just missed your agency guidelines. We're at a 40 front, 50 back on the debt ratios, where I believe Fannie goes to a max of 43, maybe even lower on those loans above the standard loan limits per county, which we are not subject to on non-QM. We'll go up to 2 million to 90%, 3 million to 80% on that program. And we'll season a housing event 48 months, as we discussed earlier. Fannie, on many instances, is up to 7 years. So between our debt ratios and our seasoning requirements and those loan amounts to 90% with no MI, as Gigi mentioned, on all our programs above 80%, no MI.
Yeah. One of the, I guess someone else asked over here, I'm going to jump back to bank statements. What makes us different from other bank statement loan companies? Well, if you haven't closed a loan with us, then, you'll learn the difference, So we'll calculate the income for you. We'll close a loan in less than 30 days. You have access to subject matter experts like we have here on the call. And, I'm not sure how many of our competitors are having these type of webinars helping you increase your income in the years to come. So that's what and I'm a little bit biased, but that's my personal opinion. So Gigi, anything else on Platinum? Platinum, again, we'll spend a little bit of time here, guys. Any questions coming in, keep them coming. If we don't answer them on this webinar, we will definitely get them answered for you by your account executive. So, and David, yes, rates have dropped here on Platinum program also. On the bank statement program, it did also. So they did drop. They are not reflective as of this second. I don't believe they're reflective on our quick quote tool, but so the rates we show you in a little while will not be reflective of the rate drops. And they dropped anywhere from 1/2 to 1/8. So some significant in certain buckets. So, so Gigi, a question here, are there prepayment penalties on these loans?
The only prepayment penalties we have are on investment properties. So any primary or second home does not have a prepayment penalty. The prepayment is 3 years, which can be bought down or out, down to a 2-year, 1 year, or out completely on any investment property.
Yeah. And Mark Buchanan, I think, we'll get you your rep in Georgia. So we'll make sure to get you your local rep there in Georgia. So we appreciate you being on the call. And really, I didn't do this at the beginning of the call. I really want to thank everyone for taking the time out of their day and wanting to learn about non-QM. So if I didn't, that's probably Scott's fault that I didn't do it. But no, but we do really appreciate you taking the time out of your day to jump on this call. Gigi, we're going to jump into our program we just enhanced and also rolled out probably less than 90 days ago, was our Portfolio Select program. Can you give us some highlights on this?
Yes. So Portfolio Select, very similar to Platinum. The difference is the seasoning from any kind of foreclosure, short sale, bankruptcy, or deed in lieu, which is 2 years on this program versus 4 years. This program maximum LTV though is 85%, not 90. And our scores are down to a 620 on this program.
Yeah, so there's a question here, and I'll answer this one. Is the Platinum program, or really all of our programs are manually underwritten. The great thing is you have access to that underwriter. And we also have an account manager that is also a liaison with you and your account executive. So everything we do is manually underwritten. And for those of you who may have just jumped on the call, I mentioned earlier that almost 25% of the loans we close don't meet our guidelines. And we're going to, and Scott mentioned this earlier, not only are we going to calculate that bank statement income for you up front, we're going to look at the credit, we're going to look at the 1003. We're basically almost pre-underwriting this at the account executive level, and we're going to no one in this company is going to issue a pre-qual and put their name on it without having it run it. And if they're unsure about it, we've got a help desk for them. So again, we are so conscious of your referral partners that all of that goes into our thought process when we're doing a pre-qual for you. So I just want to make sure everyone's aware of that. Also, so the same question here, your account executive is going to put your borrower in the best program for that borrower. So I just want to make sure we're clear on that. And then, Gigi, a question here about ITIN borrowers.
We do not do ITIN borrowers.
All right. So, yeah,
We
so,
don't have
Roberto, right? Yeah, Roberto, that's not a borrower we will lend to today, but, who knows, 6 months, a year, I don't know. I'm not making any promises, but everyone does need to really check back with the website and with your local account executive because things are changing. We're almost a year out. I can't believe I'm going to say this. We're almost a year out from the pandemic. It was middle of March. And again, as I mentioned earlier, we've had 24 enhancements. That's like one every 2 weeks. So stay tuned. All right. Anything else, Scott? Anything to add about Portfolio Select?
No, that's one of the programs that is straight non-QM with 2-year seasoning of a housing event. That gives them the opportunity to buy today and still season their housing event until they're ready to go Fannie Mae.
Yeah, and I was just talking about this the other day. We had it was about 4 years ago. We had a borrower. She was a school teacher, a bad relationship. So obviously the house got hurt. They let the house foreclose, but we could see she was a 700 plus borrower, and that was the only event on her credit. We did a loan for her. This was about 4 years ago, and so she got back into home ownership. So fast forward 4 years, she's got that further in that the seasoning on that foreclosure further in her path, and she now has, especially here in Dallas, she now has the appreciation of 4 years of home ownership. Maybe in another year she's refinancing and she's going to be, so above water it's not even funny. So don't discount those borrowers. We can get them in a home today, and they can get the satisfaction of appreciation of home ownership. So let's not forget about those borrowers. Keep the questions coming. They're great questions. We'll even stay around afterwards, but we're going to get on to a program I love, which also has some major enhancements. We're going to have Scott cover investor cash flow. Take it away, Scott.
This is. Do you have a question to pose to the
No,
crowd?
just go over the highlights of.
Got it. I didn't know if you were going to do another survey.
Time out. You are 100% correct. Yes. So we're going to do another survey. So thank you, Scott. You're always keeping me in check. I love it. So we're going to do another survey before Scott goes over the highlights of investor cash flow. So if anyone has anyone closed an investor cash flow or debt service coverage program in the last 12 months? So again, we'll take a few seconds here. So again, I really appreciate everyone on this call, taking the time to educate themselves and learn about these programs, because, the Mortgage Bankers Association says, refis are going to decrease by about 46% in 2021. So all of you have had fantastic 2020. Think about potentially, half of your income going away in 2021. That's why we're having these webinars, because we know what's happening out there. Purchases are going to increase 9% in 2021. So this will expand your product and your toolkit for capturing more of those purchases. Okay, and it amazes me, Scott. You're gonna roll your eyes here. 85% of you on this call have not closed an investor cash flow or a debt service coverage loan in the last 12 months. Huge opportunity.
Wow.
It's amazing. So Scott, go over the highlights, and hopefully we can turn a minimum of half of those into closing investor cash flows, because they're infectious. You close one, you're going to close more.
Oh my God, they're the easiest loan you will close. It is a no income, no employment loan for investors. Again, a no income, no employment loan for investors. You're not putting any income or employment on the 1003. We don't want any of that information anywhere near the file. It is strictly based on the debt service coverage, the DSCR there, debt service coverage ratio of the subject rental versus our new PITIA on that property, meaning as long as the market rent per the appraiser on a purchase is at least equal to our new PITIA, you got a deal. The borrower has to own a primary residence. There are rare instances where that doesn't take place, that the borrower lives in one part of the country and is buying another property in another part of the country. We can talk. That is an exception. But by and large, the borrower does have to own a primary. But as long as they own a primary, they can buy as many rental properties as they want. We do have a limit of exposure to one borrower to 5, but we don't have a limit on the number of properties they own, is my point. They can own 100 other rental properties, and we don't care. We only require 6 months reserves on our subject property only, and on a cash out on an investment property, we will use the cash out as reserves. So between the no limit on the number of properties owned, the fact that we can close this in an LLC, we can close an investment property in an LLC, agency cannot do that. This program and the bank statement program Gigi was discussing earlier, these two programs speak so much to your agent partners because they're number one, self-employed for the bank statement program, but number two, your best agents, every one of them is an investor. And that if you're not bringing these programs up, basically, as John mentioned, purchases are going to begin to rule the day here this year. Refi business is going to take a little downturn. And so you have to be out on the street talking to your agent partners because there are an awful lot of loan officers who are going to be doing the same thing. And if you're talking great rates, great service all the time, they become tone deaf to that. This is an opportunity to have discussions that are concrete about things they grasp, self-employment, investment properties. And again, closing these in an LLC, just a terrific opportunity for you guys.
Yep. So Gigi, someone asked, do we do mixed use properties or multifamily?
We do not do mixed use properties. We do up to 1 to 4 residential units.
Right. Yeah. And any gifts allowed? Scotty, any gifts allowed? And maybe roll this out through all the programs, Scott. So let's answer that question for Richard.
Sure. So on this particular program and any of our investment properties, we do not allow gifts. But on our primary residences purchases, we do indeed allow gifts. We'll allow, as long as the borrower has at least 5% of their own funds in the deal, as well as the required reserves, which is 6 months. We'll allow, if they're doing a 90% LTV, they can get a 5% gift and a gift for the closing costs. Again, they must have their own funds for 6 months reserves plus 5% of their own funds for the down payment. Unless we're at 80% LTV, then we'll allow 100% gift there. Again, they have to have their own reserves.
Yeah, and Gigi, a question came up here. If we can clarify what the LTV, 80% LTV, what's the minimum score required?
For which program?
I'm sorry, for investor cash flow.
Oh, investor cash flow, we will go down to a 640 now with an 80% LTV. And a couple other things on this program. Remember interest only, which investors always want interest only, down to a 680 FICO score on the investor cash flow.
Huge.
Yeah, so Ruben has a question here. What does the no debt service coverage mean, Scott? You know, at a certain score, a certain LTV?
Sure. So at a minimum 700 score, if our LTV is 700 or less, we will allow a no debt service coverage. If for some reason the debt service coverage isn't sufficient, we don't care. We're still going to ask for that rent comp schedule from the appraiser, but at 70% below to 700 score or higher, doesn't come into play.
Yeah, and then Gigi, the other question came up here. Who do we order the appraisal through?
So we have 4 AMCs that you can order the appraisals through. And there are 4 that are on our website, which we haven't got to the website talking about our resources page, but we do have 4 different AMCs you can choose from.
Yeah, and Sarah's asking for details on matrices. We'll show you our quick quote tool, Sarah. You won't really need a matrice, but the matrices you have are these 2 subject matter experts. Every AE at Angel Oak knows, lives, and breathes, these product programs. And I'm pointing to my mate. I even keep them on my desk every day, my matrices. So, they're your subject matter experts, and they are aware of, I'm hesitant to give matrices to people because they think that's it. That's the box we live in. It's not. As I mentioned, 25, 30% of the loans we close don't meet our guidelines. That's why you work with your account executives, because they know the deals that we can get taken care of. And Scott, if you mentioned this, I apologize. Didn't we just roll out yesterday a huge enhancement? Not only did we do 6 months for a refi, but what did we roll out yesterday?
Well, we had been limited as about 10:30 yesterday morning to $1 million on this loan. And now, as of today, we can go to $1.5 million. $1.5 million loan on this. And when we get to the pricing engine, we'll show you, look, these are not fanny deals for obvious reasons, but I think you'll be surprised with our pricing.
Yeah, I mean, I've had that question asked a couple times. So investor cash flow rates, you're looking at rates in the 4s, 5s, and maybe slipping into the low 6s, depends on the score. But you're talking about someone who's not coming to the table with tax returns, right? You're talking with someone who's not going to have, 15 lease agreements. So think about that. And now the cash out after 6 months, huge.
Thank you.
So
good point, John. Let's hammer on that one again.
Yeah.
John just mentioned, if you've got borrowers who are buying properties and rehabbing them and then are looking to cash out after the rehab is completed using the appraised value, we will now do that after 6 months ownership. Used to be 12. It is now 6 months.
Yeah. So if you have investors that have over 10 properties, obviously they're not getting Fannie, Freddie, any agency financing, and they want to purchase more homes. We don't care how many properties they have, right? So, and people are, I've seen a lot more of these programs, a lot more of these buyers coming through Angel Oak now with our investor cash flow, because people are wanting to put their money in real estate because, areas where we all are, the Southern Belt, the stuff is going crazy right now as far as real estate. So why not? A couple other questions. Someone asked here, do we do W-2 programs? Absolutely, we do. And we do that on our Platinum. We do that on our Portfolio Select. So we do those on those programs. Again, bank statements, investor cash flow are 2 of our most popular programs.
To be clear, we also offer agency products that have some pretty smoking rates as well.
Yeah, Scott brings up a good point. Right after the pause, we really launched, agency programs really to help out our broker partners who were running into those 3-4 week turn times. So we didn't have a backlog of agency. We launched it and we did fairly well. And a lot of our broker partners continue to do agency loans with us, and we appreciate you for doing that. So thank you. What's seller concessions? And this is something maybe, Scott, if you want to go over the whole broad gamut of what we allow for owner-occupied second homes and for non-owner occupied.
Sure. So we, for primary residence second home, we'll allow up to 6% seller help across the board. If it's an investment property, we'll still allow seller help, but that's at 3% max, John.
Yeah, great question. And Ruben, owner-occupied properties cannot be closed in an LLC. So thank you for asking that question. Again, keep the questions coming. I know we're not going to answer all of them today, but we're going to do a really good shot at it. And then last but not least, Gigi, I think you're going to cover our asset qualifier program here. So, and hold on, let me time out. Getting a little fat fingered here. Go ahead, Gigi, if you want to give a high level.
Sure. So the asset qualifier is for your clients or borrowers that have very high level of assets, liquid assets in the bank, 401k, stocks, bonds, etc. Same thing, basically comes off our platinum rate sheet. So the rates are the same with a quarter add-on for asset qualifier. Loan amounts up to $3 million. Minimum loan amount on that is $250,000. So there's no employment, no income, again, no DTI. Everything is based on the assets. We actually have an asset qualifier worksheet that you could fill in, and it will just tell you right off the bat, do they qualify or they don't. There's interest only available as well. So what it is, it's the loan amount, and it is all their recurring monthly debt multiplied by 60 months, including their funds to close and 6 months reserves. After that, they need to have $500,000 remaining as liquid assets to qualify for that program. Very easy.
Yeah, and this is, go ahead, Scott. Did you have a question? Okay. So, this is for that borrower maybe sold a business, a year ago, or maybe, someone unfortunately got a settlement in a divorce or, accident. This is, and we just reduced this from 12-month season into 6-month season and on those assets for that asset qualifier. So, again, programs are changing. Really, we don't want you to say no. Call your account executive. That's what, and, they're on the same comp plan you guys are on. No one's really making money till the loan closes. So, so just make sure to reach out to your account executive. So, we still have some other questions coming in. Obviously, we've answered most of them. Down payment. Bo is asking a question for down payment. How long does it have to be seasoned, Scott? Let's just go for 30 days. So, Bo, hopefully that.
Funds to close. All funds to close need to be sourced and seasoned 30 days.
Great. So, guys, so we've got about almost 10 minutes. We're 50 minutes into this. We appreciate, everyone still being on this call. Really do. Again, we are going to get all your questions answered. I promise you. But we're going to show you a couple of tools here. Scott's going to take us through it. A lot of people are asking about rates. So let's take them through our quick quote tool, Scotty.
Yeah, let's do a bank statement deal, John.
Okay, let me minimize a few boxes here. Okay, have at it. What do you want me to put in here?
Let's go 750 loan amount, 750K.
Okay.
Do a 760 score. How about a 75 loan to value? Which is, by the way, that is our average LTV for bank statement deals. Our average score is about 710. The average LTV is about 75. And a purchase, pretty good.
Wow. That's pretty spectacular. For alternative use of income, you've got a par rate of 3.99. So, and you can see some other high level parameters around here. And they'll give you your seasoning from a foreclosure or a housing event, bankruptcy. But I mean, tell that borrower if they rather go, pay Uncle Sam 60% of their taxes or use their bank statement for income. That's not a bad deal there. Scott, you want to run another scenario?
Yeah, let's change that now to a DSCR, investor cash flow, John, for income type. Let's leave everything else they're the same.
I just changed yeah.
That's fine.
So one before we do run there, Scott, you can see where it says bank statements down here still. You requested a 75%, and this goes back to some people asking for matrices. You don't need it. Your borrower could get a 90% based on those parameters. So again, think, this is a great tool. I'll tell you right now, you'd be doing your account executive a huge, huge service if you ran this first and got nothing. Then they could take you through a scenario for you. So we're gonna do a purchase here, and we're gonna go.
Change that to DSCR. Don't change anything else, John. So
okay.
I want to make sure everybody understands. This is the investor cash flow program. You're not getting pricing here for one reason, and John's already started it. You have to change the occupancy to investment. Make sure you do that to get your pricing. So this is the no income, no employment loan. that we can close in an LLC for your investors, which there's no additional bump to rate or LTV restriction for closing in an LLC. We're at 4 3/4 for an investor. Pretty good.
Yeah, that's a 30-year fix, just so everyone knows. Everything you see pricing here is a 30-year fix. Couple of great questions coming up here. You don't need login credentials to use this quick quote. But I will promise you this, if you're waiting to get your login credentials until you have a loan, you're probably not doing you or your borrower or your referral source any type of service. So, get that taken care of, and I'll show you here in a minute. Scott, one other thing maybe to go through, let's talk about how LOs can get paid on these programs.
So great point. So, which is why we're doing this. I do love the mortgage business, but so at 4, let's take this example right here. The 4 3/4 rate, that is a par rate. You are charging the borrower up front whatever you're required to per your boss. 0 to 3% is fine with us. But again, that is a par rate with you charging an origination to the borrower. However, we do offer lender paid comp as well, and you can get paid by raising the rate, and it depends on whatever your lender paid comp plan is at your particular broker shop, but you can absolutely get paid that amount via the rate, and perhaps a discount on top of that we would charge. When you go lender paid, you're not charging anything. You can't even charge a processing fee. All fees charged are by us. So if there's a discount that's needed to get you to your full compensation, then you make us the bad guys charging that discount to get this program.
Yeah, so hopefully, Linda, that answers your question. So it was a great question. We really appreciate it. And we're getting closer to the top of the hour. So a couple of, and as Scott mentioned earlier, we have an agency quick pricer here. So again, we're focusing on, the large portion of our business and where we really can help you grow your business as non-QM, but we do have some agency pricing tools here for you. Some other areas of expertise, a few questions have come up. Where do I find my account executive? Well, find an account executive. It's on our website. The website is so easy to use, very intuitive, and we'll here's Gigi. Great picture of Gigi. So right here is where you can find your account executive. Let's talk about resources and documents. Here's our approved AMCs. This is where you would go to order your appraisal through one of these 4 or 5 appraisals, AMCs. Application package, we talked about having to log in. You could get your request for user access and a password is right here. And then you email it to our TPO approval desk. So these tools are all here for you. We're going to talk about one last thing, and that's how Angel Oak is going to help you grow your business. So, and you do need a login credential here. So if you don't have access, try and get it today. So Gigi, why don't you just share some really cool tools we have in our portal, and just kind of show everyone here, here's just some of our turn times right now here. So not only are you logging into the portal, we have videos and tutorials on how to do everything. So, but you also have your account executive, your account manager, and your underwriter available to help you do anything that you need. So I'll stop talking, Gigi, and I'll let you talk.
So once you log into the portal and you would go to the marketing section, there's different types of things that you can personalize yourself, which would either be flyers, social media, whiteboard videos. So if we go to the flyers, let's go there first. You have a choice of choosing, and once you log in and you choose a flyer, it's going to automatically import your contact information to this flyer down below. So all you would have to do is put in your logo. You have the option of choosing 2 logos, one left, one right. Put your logo at the top. It doesn't say anything about Angel Oak. It's our parameters of our program, but it has all your information, your company logo, and it's your flyer. So we have flyers for every one of our programs. We also have flyers you can market to CPAs, to realtors. If you want to click
Oh yeah, sorry, Gigi, got lost there a little.
So that's a
Yep.
flyer specifically for a CPA that you can show them what we do with bank statement loans for their self-employed clients as well. So besides the, where we at?
Social media?
Social media.
Yep.
So with our social media posts, all the information is there without saying Angel Oak. You can still personalize it. You can post anything, gives you all the information about all our products.
Yeah, the great thing about this, Gigi, is, you know, we've already done the work for you, right? So, you know, this one specifically directed towards realtors. This one specifically for bank statements are directed towards borrowers. You don't have to do anything. We've done the work for you. I promise you, go out there and market yourself a little different. You know, Scott mentioned it earlier. You've got great rates, great service. Really? Okay. This is a way to differentiate yourself in 2021. You know, almost 75% of you have not done a bank statement loan or an investor cash flow. Why wouldn't you try marketing that? I'm telling you, self-employed people hang out with self-employed people, and once you close one of their loans, they will refer them all to you. And that investor cash flow, you close one, that borrower will be back to you because it's such an easy loan to get closed. And then the last thing I think we'll talk about here, Gigi, is, or I can even talk about it. We talk about presentations. I just did one this morning with an account executive here. We did a Zoom call with a local loan officer here with about 10 realtors on there. And this presentation is done for you. We've done it. All you have to do, like the flyers, insert your logo here and put your information here. Doesn't say anything about Angel Oak, nothing. And the AE who presents this, all of our AEs are professional and will present this on your behalf. You just have to send out the meeting notice to get them to come to your Zoom or to your office building, and the account executive will present this on your behalf. They don't mention anything about Angel Oak. They just say, hey, send everything to Sheila at ABC Mortgage. And that's all, everything is directed towards you. The one we did this morning was fantastic. Every realtor was asking great, engaged questions, just like all of you are asking these questions. We will do this on your behalf, and I'm telling you, it's probably one of the most powerful presentations you can do to your referral base. And that's, you know, so we've got about a minute left. I'll look and see if, you know, this, just want to make sure that everyone does know this is recorded. We will get this out to you. You know, so Gigi, so I'll leave you with maybe a closing comment you want to close with.
Just want to let everyone know that every account executive across the country knows everything about our products. They can answer your questions as soon as you have them. We'll look at any scenario you have. We'll look at your bank statements for you. We'll make sure that when you submit that loan, it's going to close.
Scotty?
Yeah, look, as Gigi was going through those marketing flyers, you guys really should arm yourselves because if you're not talking to your agent partners, someone about these programs, someone else is.
Yeah, and with that, Gigi, fantastic job. Scotty, great job. Everyone, you know, thank you for participating and thank you for staying on the call. We will get you a copy of this presentation. The questions that didn't get answered will get answered by your local account executive. And then one last thing, someone asked us our turn times. I think I showed them here. We're about 2-3 days. You know, we will close a loan in less than 30 days. So, you know, thank you again, Gigi, Scott. Thank you guys for investing in your future, by joining us on this call. Thank you very much. Have a great, safe, happy New Year. Thank you, everyone.
Thank you.